Hey everyone, this is Evan McCarthy from evanmccarthy.com. Today we're going to look at the technical analysis of the S&P 500, specifically the ES, which are the E-minis that most people trade when they're doing their day trading. It's at least what most of the crappy trading rooms that sell their services try to tell you how to make money trading. But anyways, so here we are looking at it through the Thinkorswim platform. We'll look at it on two different platforms, Thinkorswim and then also MetaTrader 5. This right here that we're looking at this is a daily chart of it from the past 10 years because I want to show something real quick. So way back over here from July of 2010, a move started, and it never came back and hasn't fulfilled it yet. This right here, this move, this setup right here is the bread and butter trade. And what we look at for the bread and butter trade is when price breaks out of it, we're looking for it to retrace back to the 50% level based upon this lower pivot right here, and then whatever the high of it is right here. So far, ever since then, price has never done that. All it's done is continue to go up and up and up and way up. Here is around the election time over here. You can see all the craziness going on, and then ever since then it shot up, came back down a little bit, shot back up, now it went back down. Now it's gone back up again. So the box right here, what this box represents is that's the 38% retracement level, and that's the 58% retracement level based upon this. So let's remove this, and then let me show you what it looks like here. So here it is down at here's the 38% level, and here's the 50% level. So eventually this will come down and get fulfilled. When that happens, I do not know. Now it's still a little ways away. So as you can see right here, price came back down, got close to 38%, which is 2202. Never hit it, which really it doesn't mean anything. It just means there's going to be probably some support right there, and then it has gone back up. So eventually, on the long-term time frame, price will come back and hit this. Now, if it continues to go up, I'd move the retracement level, continue to move up with it. But based upon this current high of 29.47, the 50% level for this move to be completed would be around 1970. But I do want to show one thing in how this could signify that this move up is going to stall, or at least be over for a while, is after you had that big move down right there where everyone's saying, oh, the bear market's here, you can see the MFI went to the oversold level, and now as you can see, look at this volume increasing over here too. So lots of stuff going on compared to this last little uptrend over here. But the MFI went to the oversold level right here, bounced back up, and it's pretty much going straight up ever since. But then now look at over here, you have the MFI. We'll enlarge this a little bit. There's MFI almost bouncing off it, getting a little bit higher, bouncing off in it, but not making higher highs. So what I think is going to happen, again, I may not be right about this, is it's still going to move up to the upside a little bit, but it's just based upon this setup right here. But eventually it's going to come back down. How much lower it's going to go, I'm not sure. I don't know. We could do it based upon the lightning trade from where the Fibonacci extension levels, if it goes down and hits that from there to there. But so I think it will go up a little bit more, and I'll show you why I believe it will here in just a little bit before it starts turning down again. Because eventually, when you're on the daily chart and you're doing the bread and butter trade right here, let me remove this right here. When you get past the 261 Fibonacci extension level, that's pretty big without having retracement. And as you can see from right here to right there, there's 261. I mean, it's gone past the 423 level right there. So it just blew through it, came back support, blah blah blah, whatever. Now has gone up there and through it again. So if you're using like 5, 15 minute, even hourly chart, if it goes through the 423, not that big of a deal. You see a lot more often. But on the daily chart, especially when it gets past the 261 level, that's when there's eventually going to have retracement, probably sooner than later. So I'm not sure if this is like the first hiccup and what it could be for it, kind of like the first test, driving it back up, and then it's going to drive it back down again. But when it gets to that level on the bread and butter trade, the 423 Fibonacci extension level, I'm very worried about it. Like if this is in one of my forex trades, then I'd be looking to short this all day, every day. You know, when it gets that level, that's such a good entry right there for it. When it gets that high, that it'd be a screaming short for me right now, especially if prices going back up to the highs, and then I'd be looking at shorting at other levels if it continued to go up. But I don't trade the ES. I don't have that kind of capital to do that, and there's time constraints with it, things like that. So that's that's why I think it's going to happen. But I do think there's a little bit more room to run to the upside here in the near term. Let me show you why here in the 15-minute time frame chart. So from right here, what we have here is a lightning trade right here that hasn't been fulfilled yet, that I talked a little about earlier this week. So in the other video I was talking about the ES, I had mentioned, okay, there's the lightning trade, there's the entry for me. It broke out from this pivot point right here. Went up, hit the 38, so then the exit moves down to just north of 26.16, and I think it was this day when I was talking about the ES and how price is bouncing off the 38 right there. But price continued to walk around, and then it has shot back up. So the exit still from this lightning trading setup just north of 26.16, so I'd say like 26.18. But if price continues to go up and hits the 26.77, then the exit would move just north of the 26.46 level at the 50% Fibonacci retracement level to say 26.48 would be pretty good. Again, I like round numbers. I'd probably, if I was in this, I'm not getting into this, but I'd probably choose like 26.50 just because, again, I like round numbers. And so that's what definitely, if you're long, if you're a bull, then you definitely want to see price go up first, hit 26.77, because then when the retracement happens, you're going to look at around 26.46 of being the area of where there's going to be some support there where you can get out of it. Now that doesn't mean price continue to blow through that, but it puts the level to get out of this trade at around 26.46, which is obviously a lot better than 26.16 for the near term. But there is definitely a setup the other way that look like it's could be going on right here. There's just a lot of stuff going on. Here you have this setup right here. There's lower pivot, there's the upper pivot, and you have one down here. So if price breaks out of that and it's going to go up and hit the momentum play, you're looking at 26.88 based upon the lightning trade for it. But let me show you real quick from MetaTrader 5 here. So based upon this, again, this is the ES right here, rolling contract through MetaTrader 5. So right here, this is a daily chart. I'll go back into it to the shorter time frame from their setup is actually from right here. As you can see, based upon line train setup, price broke out of it on the pivot, because I think it's either a 5-minute or 15-minute from what this setup is off of. Came all the way back down the other way, all the way to 261, bounced off it nicely, and has been going up ever since. So for the exit for this trade right here, for this setup, and this is why I think that stock market still has a little bit more room to the upside, is based upon this yellow line right here, which is the 50% level of the retracement level for the exit. So say it's a little bit south of the 50%, so we'll say 27.15. The actual 50% is around 27.22, but we'll just say 27.15. Just get out a little bit earlier if you're in for a good target. So right now, price is at 26.65 and 50, 26.65, 50 cents, whatever. So for this setup, it definitely has a little bit more room to run up to 27.15, 27.22 right there. And that's why I think that the stock market will go up a little bit more, or specifically the S&P 500. And then once that's complete, then that sets up the move back down to the downside. Again, price doesn't have to move back down to the downside once it hits. It could blow through it, keep on going up. That's definitely a possibility for it. But based upon this huge move it had down here without getting completed, as you can see, it's coming back up and it's getting pretty close to completion. That is why I think, especially with what I showed from the other chart from Thinkorswim from the 10-year daily chart with the bread and butter trade yet to be completed, I think that's going to be completed before there would be another move up. So that it doesn't necessarily mean that let me show you again here real for the bread and butter trade that if price, say it stays where it is right here and doesn't make a new high, continues down to hit that low, looking at around 1979, 1980 to be completed, to complete that bread and butter trade for the retracement level. Now again, it doesn't mean price could go lower. It definitely could go lower than that, but that's definitely the chart looking for that move, huge move up to be completed. What happens after that, I have no idea. But again, with price on the daily chart being north of the 423 level without there being a retracement, that's why I'm more bearish than bullish for the S&P 500. I think there will be a move down to come here and complete that before there would be another move up in the stock market. But again, it wouldn't be the end of the world if this does turn out to be completed. Say it doesn't just totally get destroyed down here in the 1300s or whatever, because this is around the election level just around two years ago. So they'll say it's a huge horrible market, of stock market's going under, blah blah blah. No, it's not. It's not like it was back in 2009 with the housing mortgage crisis, when you have it down here at 672. So far cry from that. Definitely you see all the talking heads and everyone on CNBC complaining and everything, but that's what I think is going to happen. But let me show you the setup, because again, I think it was over here what I saw was from the 5-minute chart, and that's why I put it on there. I want to show you. Okay, yeah, so you have the lower pivot on that one right there, and then you have the upper pivot off that move right there. So you can see it barely broke out of it, but it is enough. You got a couple of closed bars in the 5-minute chart to be north of lightning trade that instigated it right there. And then ever since then it just went down, bounced around a little bit, came close to hitting the 50% level, never hit it. I'll bring that back up to the 50% level, and because there's the zero right there. If it had gone up another 27.14 to 27.22, another 8 points, whatever, it would have ended that trade setup, and like trade would have been completed. Never did. Kept on going back down, and then has finally in the past week or 2 weeks has gone back up. So that's what I think is going to happen in the S&P 500. There's a little bit more room to the upside, but once that gets completed around, I believe it was 27.72, yeah, 27.22. Then look for the move where, if it is going to happen to the downside, then it can happen there. Price definitely didn't have to stop up here at 27.22, but that's what I'd be looking for. Then I would be looking for trades either way, either long or short. Right now my bias is to the upside. Once it hits that, then my bias is probably switched to the downside based upon the bread and butter trade. So hope all that rambling made some sort of sense. That's based upon how I look at the market through my trade setups. Don't construe this as financial advice. Do your own research, blah, 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 blah. And hope that helped. Make some money, and talk to you later. Bye.